and keep it as simple as I can regarding the broad market. I'm not going to throw too many charts at you today, but we're going to retrace some stuff and see where we're at. This is the 2022 bear market, the 2023 recovery. And so there's two scenarios that I'm laying out right here. And it's the same as it's always been. We recently have pivoted to this red count being the alternative. It's still an alternative count, in my opinion. And I went over the reason why that is. For this to be a first wave, this would have to be this weird leading diagonal, which even stretches the rules of leading diagonals. And even the internals don't really support this being a third wave, but price is king. If price breaks out and we keep going, if it meets the parameters that we've set out to tell us this is what's happening, you'll see us pivot even more into it, into this red count. But as of right now, I'm still counting this 2022 bear market was your A wave. What we're getting now is an A, B, and this is the C wave with an extended fifth wave. And that would mark the top, the B wave top, followed by a C wave that would take us back down to finish off this bear cycle. And what would follow from that would be, liquidity driven, economic expansion, bull market scenario, multi-year bull market would follow that. The other scenario is that this is your first wave, really messy second wave, 1, 2. We're still working on the third wave of a larger third wave, and this would take us to new highs, and that would complete the 5-wave pattern off of the COVID low. 1, 2, 3, really extreme fourth wave, and your fifth wave up into here. What would follow that would be a large decline. So from a technical perspective, there's just nothing that I'm seeing that says we're about to start another 10-year bull market like we did in 2009. So that's one of the reasons we're so cautious right now. We're more defensive than I've ever been as a portfolio manager, just because the possibilities are so extreme. This is not normal that we could be looking at a 1,000+ decline, which the probability of support, which also lines up with a macro backdrop that would support a drop like this. Or we could be looking at a continuation. Another 1,000-point drop, move higher. So there's two big moves on the horizon based off of this price structure. So we're in this kind of wait and see mode before we want to get too excited or too prepared one way or the other. If we dive a little deeper to get an idea of what could be playing out, let's see here. Or the levels that I'm watching. So here, that's my alt top. Here's what we're looking at. And this is an hourly chart. So let's see here. This would be your fourth wave right here, or second wave. 1, 2, 3, 4, and we're in this kind of diagonal pattern. And so this diagonal pattern is very stretched. There's a way that this is the top right here, this green count. That would be confirmed with a move below 4,450. Below 4,450, and this blue count, which suggests that we can make it up to 3,615 before a bigger pullback, that gets taken off the table. And let's see here. And if price breaks below here, the next level of support is going to be 4,250. And so say price breaks below this green line right here, blue count gets taken off the board. There's two alternatives: that this was the top, or that this is going to be your third wave and we're in this kind of bigger fourth wave that would take us down into this region right here. One of the things that I find interesting is we have this cycle, we have this time factor, and the markets tend to move into these time factors. They tend to reverse into them more times than not, or we see some third wave breakout or breakdown, but they're inflection points and they're pretty accurate. We top before it, so I got to factor in that we find some kind of a bottom here and then move up higher into next week. And most of the charts that I track, like this is my Gann chart for the NASDAQ 100. Here's your Gann fan. You can see how it lines up with all these swings really, really well. And we topped right at the 1x8 line. And here's your time factor coming up. It's really a really tight window, July 22nd through the 27th. And we didn't top into it. It looks like we could bottom into it. And that's what we have to be prepared for, is a bottom with one more push higher. And so what I find even more interesting is the next cycle up is, let's see this one right here. And this is actually a really big one. I'll show you how accurate it's been. These orbs are these kind of gray shade. Look, I mean, this low, this major low, swing high, this swing high right here, the low, this minor breakdown, and it's coming up right here. So it's pretty accurate. And that's like in August 10th. So that'd be the next opportunity. And then after that would be your kind of late August. A lot of indexes or stocks are showing these kind of clusters right up in here. So that would be the next region to kind of look for something to happen if this is not the top that we're looking for, either of a third wave or of this larger B wave. For us, the determining factor is going to be, is this move a 5-wave move that breaks below this key support, or a 3-wave move that holds right up in here? And if we get that 3-wave move, say into that August time factor, you're going to see us go on a pretty large and quick buying spree. We'll probably add a lot of money in to very specific names in that region. So that's the criteria we're looking for.